I need to write off some pledges receivable, but I don't want to mess with last year's audited books. How do I get this done? So I'm going to give you an accounting answer, and I'm going to give you a technology answer. The accounting answer is that if your not-for-profit organization has not already done recorded an allowance for doubtful pledges receivable, then if you're using the direct write-off method, you do something in your technology that credits accounts receivable and debits a bad debt expense, the not-for-profit version of that. It could be like, I don't know what else to call it, a bad debt expense, frankly, if anyone has any ideas. It's the pledges that you're writing off and you're expensing. When should that entry be dated? Whenever the management team decides, that maybe it's the executive director, the director of business development. Guys, we're not getting this one. And on that date, an entry is made to write off by crediting pledges receivable and debiting your bad debt expense account. In the technology, what to click on could differ from technology to technology. So for example, in QuickBooks Desktop, you can make a journal entry to write it off and then use the receive payment screen to write off, to apply that journal entry to the initial invoice. You can also use the receive payment screen to write off directly from there using the discount feature. I'm a little leery of the discount feature. It has proved to be a little problematic with the back-end geeky techie side. So I generally prefer a journal entry. Don't change the original invoice though. The key is, if you don't want to mess with last year's audited books, and good on you for not wanting to mess with last year's audited books, don't change the original invoice. Don't delete it, don't void it, don't add a line item to it that says written off later. Just leave the invoice, but apply your reversal to that invoice. Similarly, let's say you're using Xero, you can make a journal entry that has that debit and credit effect, and then apply that to close out your invoice. But it'll use the date that management decided. I know somebody pledged, but it's just not going to come in. Then later, I'm going to give you a bonus answer. Later, if it does come in, just record it straight as income. Look, it's surprise income. Boom. 4010 individual contributions. Record that in your books. That's the account in the unified chart of accounts for not-for-profit organizations. So look, it's surprise income. Just record it like any other contribution. Never mind that it was the invoice and not written off, and just forget it. Just record the income.